Hello, everyone. Bless you for tuning back into a new episode of this series, Growing a $200 Account to Four Figures, or you can say Growing a $200 Account to $1,000. So, you might be wondering why I decided to title this episode, The Market Will Eat You Alive. And here's why. A lot of us, when we are going into a trade, we are so hyped and so happy about our potential gains. You are already calculating the money before you even make the money. Oh, if I make this trade, if I hit profit on this trade, I'm going to make $20, $100, $50, whatever the number might be, according to your account. But we fail to ignore the most important thing is the downside. So you see someone who deposits $200 and is risking $20 because he sees this beautiful 1:3 setup and it's like, if I risk $20 or $50, I'm going to make almost 50% of my account and this and that. Without sitting back for a while and asking himself that if I lose $50, $100 in this one trade, and I'm seeing my balance now dropping from $200 to $150 just with one trade, or from $200 to $100 just in one trade, what would be my mental state? Would I feel comfortable? We don't look at that. We are just so hyped about the time in which we're about to place that trade. Oh, nice. All right. So the market doesn't care about you. It doesn't care what you think. It doesn't care about your sentiments. It doesn't care about the lines you draw on the chart. It doesn't care about all of that. So before you put on a trade, ask yourself series of questions. Why are you placing this trade? If you don't have a definite answer to why you are placing that trade, you better not place that trade. Why are you placing that trade? What am I risking on this trade? If this trade goes against me and I see myself losing this amount of money, how would I feel? Ask these questions before you place a trade. So that way you don't go into what they call prayer mode. You're now praying because you're in a position and the position is going against you and you are praying. So I asked ChatGPT a question, right? We'll still go into the chat breakdown of this episode and you'll see my trades, the results, and everything so far. So I asked ChatGPT, I'll attach an image to this video. I said, why does the house always win? And now ChatGPT replied, great question. The house always wins is a phrase that explains why casinos and gambling establishments in general make consistent profits over time. Here's why. 1. Built-in advantage and house edge. So if we want to correlate that with trading, it simply means in order for you to make money from the market, you need to have an edge. Just like the way it's listed here, I won't be reading all this because these are gambling stuffs. But you need to have an edge. That's the first thing. For your profitability, you need to have an edge. Like the way the house always have an edge. And then the next thing is law of large numbers. It says here, in the short term, players might win big, but over thousands of bets. The small house edge ensures the casino comes out ahead. That's why casinos encourage frequent play. The more you play, the more likely the math works in their favor. Beautiful phrase. So which means now we have two things. We have to combine the edge with the law of large numbers. So if the casino has an edge but doesn't use the law of large numbers, that means they still wouldn't win, right? So your edge, your strategy in the market is not enough. Your strategy, your edge is not enough for you to make consistent gain. This is not me saying it, this is ChatGPT saying it. Everybody knows ChatGPT, right? So this is proven given data. The edge together with the large numbers, the law of large numbers. When you combine that, now you're on a path to profitability. So let's bring this back to trading. It simply means you have an edge in the market, you have a strategy that works. But now you are not giving yourself room for the law of large numbers to come into play. You deposit $200, you are risking $50 per trade. It simply means 4 trades. That's why you're giving yourself 4 tries. 4 is not really a large number if you come to think of it. 4 is not a large number. That is why risk management is so important in trading. You need to focus on how to protect your capital as well grow your capital. If you cannot protect your capital, if you cannot protect your money, you cannot make money. The market has been there before you were born. Up except if you're an old person watching this video, then this excludes you. But if a youth, okay, you're in your 20s and you're watching this video right now, the market has been in existence before you were born and will continue to be. But your capital might not. So ensure you protect your capital as well growing your capital. So you deposit $200 and you're risking $20 per trade. You're just giving yourself 10 tries. And if you look at it, 10 tries is not a large number. So ensure, this is why a lot of people blow accounts. Many people make money from the market, but at the end of the day, they still lose money on the long term. Given data, you can see it on the screen for yourself. Why? Because they don't use the law of large numbers. Ensure that you are splitting your capital to at least, in my own opinion, at least 50, which is 2%. You are splitting your capital at least into 50 pieces. So now you have the law of large numbers in your favor, as well together paired with your edge. Then you start the chance. You stand the chance against, the market. So if you have an edge and you're using the law, you don't have the law of large numbers, it won't work. You have the law of large numbers, you don't have an edge, still won't work. Let's move on. Psychology of gambling. Casinos use light, sounds, free drinks, and immersive atmosphere to keep people playing longer. Many gamblers reinvest winnings back into the game, increasing the chances of the house eventually to reclaim the money. Let me tell you how this is applicable in the market. You took a trade and you made a win. 2% of your account, 3% of your account in one trade, risking accordingly. Instead of you to walk away and come back the following day, you are like, I entered here and price is now here. But yet price is still going higher. Oh man, I should have not closed this position. I shouldn't have set TP. And then you enter back again, reinvesting your wins, if possible, save with your capital. That is why I don't advise beginners to add to their positions. If you don't know how to do it, don't do it. Whatever you risk, leave it like that until your trade hits your full TP. If you don't know how to calculate the risk, because adding to your winning position is a very, very good thing to do, but at the same time, you need to be strategic about it. So let's say you are up $100 in profits, for example, and you risked $100. Okay? Now, maybe your stop is at break even. The trade is now risk free, and you are floating $100 in profits. What you can do is maybe take out 50, and now you are floating 50 in profits, right? And you secured yourself 50. Then maybe you can still risk half of that 50 you secured for yourself and add it to your position. So now you are adding a $25 to your position but at the same time, you are not risking any of your capital. So it's not like your capital is at risk, and because the trade is going your way, you're like, let me add more. It doesn't work like that. And now we say bankroll versus infinite play. Players have limited money, but the casino has essentially unlimited funds. Even if a player goes on a winning streak, they usually can't sustain it forever. This still goes in line with the law of large numbers. You need to be able to split your capital into large numbers. At least give yourself like 50 tries. You know that no matter how bad it is, as long as you have your edge, after 50, 100, your edge will play out. But if you've cut your capital into 4 tries, 3 tries, 2 tries, 1 tries, it's not really a game like that. Now the conclusion here is, so the house doesn't win every single bet, but across millions of bets, the design of the game guarantees consistent profits. I mean, that is self-explanatory. That is self-explanatory. You might not win every single trade, but across numerous trades. That's why it's very, very important for you to ensure that you preserve your capital. Protect your money. The market doesn't care about your feelings. If you are out of capital, the moment you're out of capital, you're out of the game. The moment your money has finished, you are out of the game. Your edge is useless. Remember that. We risk money to make money. So you want to make sure that you can risk as long as possible. How long can you survive? That's it. So that being said, that was an educational aspect of trading, psychology wise. Now we are going to the technical aspect of it. How was my trade on this episode? You know, the trade I took, what was the performance, and how did I take my trades? So you might be wondering, this video is so long. What is this guy talking about that is so long? I'll tell you this. The true knowledge can't be compressed into a 5 minutes video. I can't compress everything in 5 minutes or 10 minutes or 20 minutes. It's not just possible. Believe me, I'll do that if it's possible. I can't, because I won't go in depth. The way I'm making this series, I'm making it so educational that even your mentors are not teaching you this despite you paying them money. And I'm dropping it for free. Okay? So that's it. So how was my trade? The trade I took was actually a loss. It was a loss by the book. And I'll show you guys how I took the trade, how I marked point of interest. Okay, I'm not just coming and saying, oh, this is the trade I took, this is how it went, this is how it went, aftermath. No, I'm taking you through how I was marking POIs, coming hours later, days after, and then adjusting and adjusting, executing, going through the emotions. You see me going through the emotions of my trades and everything. So that being said, let's get straight into the trade. Okay, so we are currently going down. Like I said, it will have been wise just to, this trade will still eventually hit a full stop loss the way it's going. So I have no regrets that I closed it break even. Now let's look on the 30 minutes time frame. Okay, now we have that break of structure. We have the break of structure here, like this. This is too wide. So this line that I was talking about, price coming back to form a break of structure, has eventually happened. So now what I'm actually skeptical about is why price didn't tap into this 4-hour level of demand before all these sales that is forming. That's my main concern, because why? Had it been it tapped into that zone, I'll say okay, yes, this sell is true. But now, okay, now we have a breaker block on the 1-hour time frame. So on the 1-hour time frame, this is an area of supply. This is an area of supply like this on the 1-hour time frame. Basically, let me just delete this risk to reward, which is going to hit stop loss eventually. So I'm deleting it. Change this color to black so it can match my chart. I mean, for sales. So now we have a sell order block, and then we have
a breaker block, but at the same time we have this trend line liquidity here. This is a valid order block. All these ones are like, they're like trend line liquidities. All this like this. So we are coming for it. I don't know, but I want to look at the higher time frame narratives first to be sure before I do anything. So let's see how this, let me clear this away. Let me see how this looks on the 4-hour time frame. Okay, so this is going to be the area of supply on the 4-hour. Once this candlestick takes out this low, once we take out this low here, I think we are coming for this. This will be the first place we are coming for. Once we take out this low here, we'll have a break of structure to the downward side. Once we take out this low, we'll have a break of structure to the downward side, and then price you can have something like this on the 4-hour time frame, like this, and then like this, to then continue into this area of demand, something like this. That's how it's looking. But on the higher time frame, we are still going higher. We are still going higher. We haven't really broken any structure to the downward side. But on the 1-hour time frame, it's looking good. But at the same time, this is a sell. This is a breaker, sell breaker, and these are areas of demands also. These are areas of okay. So on that part, these are areas of demand. I wouldn't take this trade, even though everything is looking pretty cool, because I'm conscious of this demand area here. I'm conscious of it. All these areas like this is still a demand area. All these areas like this is still a demand area. Even though price is looking like it's breaking through, I mean, this is a demand area like this. So, man, the best thing I'm going to do is just wait for a breaker on the 4-hour time frame. If there's a breaker on the 4-hour time frame, beautiful, then I can confidently take the shot. But until then, if there's no breaker on the 4-hour time frame, I'm not taking any trade. Yes, the market is selling. Yes, it looks like it's selling, but until, let me draw my line. Let me adjust this like this. Until we break this, I think this will be the low to break in order for us to have a clean breaker block. This. Yes, this. So until we break this, if we don't break this, I'm not confident yet to take the shot, in my own opinion. Let me arrange all this properly, and then I'll still wait for extra confirmation. Yes. So if we can break through this like this, then this will become a new area of supply. And then I can trade, which is already an area of supply on the 1 hour. Because if I want to trade this, if I want to trade this, I'll have to do something like this. Short position like this. Set my entry here like this. Stop loss above this. And then target this. Nah, this is weird. I can't trade like this. I need to wait for better clarity so I can take my trade confidently. But I'll be really happy if price can like fall strongly, break these lows before going higher. Anyway, for now, I just want to see what the higher time frame is doing. For now, until there is a sign of market structure shifts on the higher time frame, I'm not going short. Let's see the daily. Okay, the daily is looking bearish now. The daily is looking bearish, but we have a demand here. Okay, the daily is looking bearish. The daily is looking bearish. I want to also draw this line here. This is like the bottom of the breaker on the daily. So we can target this, since price has been rejecting from there, we can target this as the full CP. When there is a confirmation on the 4 hours, we can target this area. We can target this area as the full CP and see what happens. Yeah, we can target it. So switch here. This is it. Okay, so this is the area in which the daily time frame has been rejecting from. So if you want to enter sales, you enter something like this, short position like this, target this, entry here, stop loss in above. Okay, now looking at this, there is no fair value gap paired with this. There's no fair value gap paired with this change of character here. Let me look at the 30 minutes time frame. Okay, see 30 minutes time frame here. Okay, beautiful. On the 30 minutes time frame, there's a fair value gap paired. We can say we want to enter like this. We can say we want to enter like this, and then stop loss slightly above here, which is in line with this whole move. But I'm very aware of this. I'm aware of this whole trend line. Rex. Nope. Wait for a confirmation on the 4 hours first. There's no confirmation on the 4 hours. There's no confirmation. It's tempting, but that means I'm going to be trading against the trend. I'm going to be trading against the trend, and I don't like trading against. I do not even want to trade against the trend. I don't want to trade against the trend. No, holy shit, no. So I just wait. This is how the trade will look like on the 30 minutes time frame, but I'm not taking it. I'll wait for a market structure shift on the 4 hours for clarity, then I can go short. Right now, this is 8:26 a.m. So on the 4-hour time frame, we are having price is trying to break through this low. That's why I have my price alert set here, because now what I'll be looking forward to is if price breaks, with a body closure below this, then this becomes a bearish breaker block, and this area here becomes a sell order block. Yes, so this place becomes a sell order block, and here becomes a bearish breaker block. Then I can now position myself to go, because now that will be a confirmation of market structure shifts on the 4-hour time frame. So I can down set my stop loss somewhere around here, and then entry would be probably at this body of this candlestick, and then take profit will be this. Take profit will be this 4-hour order block that we tested the last time. So we're looking at something like this. So I'm gonna have a kind of, what I'm looking forward to now is price doing this, breaking through this low, then coming back to retest inside here to then come to this order block here like this. So this is going to become a change of character here like this, and this after I enter, when price comes back again to take out this low that took the breaker block, this will become a BOS. So it's going to be something around a 2 risk reward ratio, 2.3 thereabouts kind of trade on the 4 hour time frame. But if you look at it on the 1 hour time frame, it's something like this. It's something like this. Right now, we already have a breaker block on the 1 hour time frame. We already have a breaker block on the 1 hour time frame, which means if I want to enter on the 1 hour time frame, I can already enter this whole move. I can enter this whole move already on the 1 hour time frame. Should I? If I'm entering this whole move on the 1 hour time frame, I'm going to be entering here like this. If I enter here like this, slightly above here, pair together with it, and then put my entry here and target these whole lows as take profit. I push here, target these whole lows as take profit. That's going to be a 2.7 risk to reward ratio, something like that. It's not that bad, risky one, but I think it should hold. It should hold. We are having a strong rejection from this area here, but on the 4 hour time frame, it should still close below it. I don't think price is going to like reject all the way from here. I don't think price is going to reject all the way from here back to this place. But to be on the safer side, if the 1 hour time frame is giving me a 2.7 risk to reward ratio thereabout, I mean like this, something like this, because my stop loss will have to like have breathing space, then why don't I just wait for the real confirmation on the 4 hour time frame in order for me to avoid getting wicked out for the real move, downward. So best to say I'll wait for the 4 hour time frame to close below this low first, so I can have my bearish breaker block formed to then indicate for me to truly go lower, rather than using the 1 hour time frame to. If it's the 1 hour time frame right now, I'm going to be targeting on this trade. But look at the low that I'm going to be targeting as, let's make this here. The low I'm going to be targeting is like a week. It's not strong. So which means I'm going to be doing something like this. Price come into here to then continue lower like this, and this is going to be a break of structure here. But this break of structure is just a week, and this is a huge rejection on the 1 hour time frame. This rejection is very, very, very huge. Let's look at it on the 30 minutes time frame. On 30 minutes time frame also, we are slowly consolidating to the downward side here. As we are slowly consolidating to the downward side. So price failed to take out this low here, and then rejected from there, going back up to grab some more liquidity to continue lower. Well, if I was trading the lower time frame, I'll be in this trade already. I'll be in this trade, something like this. It will have tapped me in just now on this trade. But I'm very, very aware of these demand zones around this area here, these demand zones here, because we can just have this kind of sharp reversal. And again, I think today is FOMC. Let me check my phone. I think today is FOMC. Let me check Forex Factory right now. Okay, so we have FOMC meeting by 7 p.m. There's FOMC meeting by 7 p.m. So that could also be a catalyst to move price in whichever direction. So that could be a catalyst to move price in whichever direction. Probably towards the downward side, that would now give this break of structure to the downward side. That will now give this break of structure to the downward side to form. So for real, in as much as it looks tempting for me to already be in the trade now, in as much as, because to me this is like a correction sell, not really a strong sell. It's like a correction sell which I'm willing to capitalize on. But if I'm not seeing any strong confirmation from the 4 hour time frame, look at this rejection. The candle hasn't closed yet, but if I'm not seeing any strong rejection on the 4-hour time frame from here, sorry, if I'm not seeing any strong body closure from here, it's not convincing enough for me to risk my money on this. But if there's a closure and this becomes a breaker block, this becomes this other block or sell, all right, then I can target it down to this area. Let's look at the daily time frame here. Let's look at the daily time frame and see what it looks like on the daily. So on the daily here we have see, price is kind of like ranging. There's no price is going sideways on the daily time frame. Price is going sideways on the daily time frame. There's no strong indication of what price wants to do. Are we going high or going low? Yes, it's like we are slowly consolidating to the downward side. If you look at the higher time frame, we are slowly consolidating to the downward side. But without price closing, closing below this low where my alert is set here, it's safe to say that price is still bullish in a way. Safe to say that price is still bullish, because now look at this line here. We haven't had any candlestick so far that has closed with a body below this bullish breaker block. This I drew a trend line here, meaning that we are still rejecting from there. There is no force enough to push price lower. So any sales right now is a temporary sell until proven otherwise. So it's a temporary sell until proven otherwise, and I don't want to be among those that will be taken up as liquidity. I mean, there's nobody who doesn't get stop loss hits, but at least if you get stop loss hit, let it be justifiable. Let your stop loss hit be justifiable. That okay, yeah, I did everything possible. I analyzed everything I could. However, the market just did what it did. So right now, me seeing this and going short is not ideal for me until proven otherwise. So now on the daily time frame, what we'll be looking at is this is a daily fair value gap. This is a daily fair value gap here. Very strong daily fair value gap. Yes, this is a very strong daily fair value gap. So we had price week in. Okay, we tapped this fair value gap and continued higher. Price came back, failed to tap this fair value gap, formed a strong area of demand here. This was also another fail. No wonder price is rejecting at this range. If you look closely here, this is a fair value gap here also. This is a bullish fair value gap. Yeah, I see. Now I see. Now I see. Now I see. Now I see. It simply means price has been rejecting from this daily fair value gap here. Now I see. No wonder price is finding it difficult to break below these lows. Yes. Let me delete this. So we are yet to even break below this fair value gap, like have a body closure below this fair value gap paired together with this bullish breaker block. Until there is a body that goes down, there is no change. But if we have a body that closes, below this, then this whole area like this would then become a strong order of sells. This whole place will now become a bearish breaker block because we've had price close below this bullish breaker block. Hence, the bullish breaker block has failed to hold. But until then, I'm still skeptical about it. So, which means not not connecting my broker here. So which means once we have that candle closure, I could target this place as the TP because we look at it on the 4-hour time frame, or I could target this new area of fair value gap since there is FOMC. That's if there is a bearish breaker block formed already, I could target downwards here because of the news. Price could break through this, but it's highly unlikely, man. I don't want to you don't set your TP based on your emotions or based on how many risk to reward ratio you want to get from the market, or how many pips you want to get. Like some people do trade and be like, they're looking for 10 pips, they're looking for 5 pips, they're looking for 20 pips. No, it's purely price action. So no matter what, realistically speaking, from a realistic perspective, we should have a take profit at this area after confirming this to be a market structure shift on the 4 hour time frame. I will have been in the trade by now in terms of short if price had wicked in to this area of supply and then came down. Oh, that would have been beautiful. I know, okay, now we tapped into this real area of supply and then price came down. So we have the real push. But to me now, price hasn't even tapped this area of sales yet. Price hasn't tapped this area of sales yet. So saying that price has enough liquidity to come down, funny enough, we might let me clear this like this. The funniest thing is that, okay, I think this was daily fair value gap I drew. So the funniest thing is that on the 4 hour time frame like this, if care is not taken, we can have a spike. We can have a spike like this from here, and then we spike into this sell order block here before we now have the true move that is strong enough to push price back to this point. So looking at it from that perspective and looking at it from that angle also, I just have to wait. I just have to wait. Because see what, let's look at the 30 minutes. See what is looking on the 30 minutes right now. See what is looking. So almost breaking through this breaker block. Might come and test itself, continue down. Maybe, maybe not. But for me, I just wait. I just wait. Alright, so that's it on it. I'll catch you guys later. If I have a price, if I see price closes and taps, trigger this my alerts here, then I'm sure about the sales. But until then, we might have price, looking at it now closely, we might have price come back to really tap this area before the real sell downwards, or even break it and continue higher. So I'm holding, I'm waiting, sorry, I'm waiting. A couple of my friends are already in trades and taking shorts, some are taking longs on different pairs. But for me, I don't have any setup. So that's the difference between trading and gambling. If you're gambling, that's because you want to make money. You just come in and then you take trades, you open trades, open the chart every day and take trades because you want to make money. But if you are trading professionally, until you see your edge fully confirmed and justifiable that yes, this is why I enter, why did you take this trade, you can explain why you took the trade, where is your take profit, why is your take profit at that point, why is your take profit at that point, at the same time, where are you protecting your downside should you be wrong on this analysis. Okay, my stop loss is here, why is your stop loss there? And then your risk is, understandable. You cannot have a $200 account and you're risking $50 per trade and expecting to grow that account the right way. Yes, you might have some wins that doubles or triples your account, but is that sustainable? Okay, no, it's not sustainable. So you make sure you are risking 1-2% of your account and you're compounding it with time. That's the same thing I'm doing here. So I'll catch you guys later. So this is 245 here, and then we had this huge candlestick that closed with a good amount of volume, good body to the downward side, and now I'm waiting for this to actually close below here like I explained earlier. No need to repeat myself. Then let me see how it will look like. So this becomes a bearish breaker block. I can already like put this risk to reward ratio down, so I know the parameters I'm working with. TP is going to be 146.439. 146.439. So 146.439 as take profits. 146.439 take profits. Yes. Okay. And then entry is going to be this. Okay, the close of this candlestick. 147.342. So 147.342 is the entry. 147.342. 342. Yes, that's the entry. And then the stop loss, this is the high, right? Which is the high of this candlestick because that's going to be the bearish breaker block. 147.521. So 147.521 stop loss. 147.521. And now we add 50 points to this. So if I use my calculator here, 179 plus 50, that's 229. So stop loss 229. Yeah, like this. So this is a beautiful 3.94 risk to reward ratio. I'm looking forward to capitalizing on this trade. Yes, it's going to be a 3.94 risk to reward ratio. So let's look at it on the 30 minutes time frame, how it will look like on 30 minutes time frame. On 30 minutes time frame is going to be something like this. Okay, it's going to be something like this. Let me make this bigger. So as we can see, I could have taken all these cells, but I haven't gotten enough confirmation to have them. So we had this was our first supply zone like this. One. Let's make this black. This was our first supply zone. And this was another supply zone. Price came back, tapped it, respected it, continued lower. This is the third supply zone. Now, price came in, tapped it, respected it, continued lower as we keep breaking structures to the downward side. Now, this area is going to become, this line is going to become the next break of structure, which I want that low to be taken out, so I know that at least there is no much hindrance anymore. So there is no much hindrance anymore of these other blocks here. There's no much hindrance of these other blocks here because we've taken out some, and now this whole zone will become a strong area of sells, because we had a lot of multiple rejection from buys, and now we are going to flip it. This zone is going to be flipped from a strong buy zone to a strong sell zone to then push price lower. Okay, so this is going to be a new break of structure here like this. I'm going to write this and leave it there. So this is going to be a new BOS. This will be a new BOS. Once price takes out this low, this becomes a new BOS. Let's say this like this, and then this could become a new area of supply. This could become a new area of supply like this, something like this all the way through. Yeah, something like this all the way through. This will become a new area of supply like this. So we can then anticipate for price to, on the higher time frame, let me come to the higher time frame to do my things. So we can then anticipate. So you see we've been building supplies here, although on the 4-hour time frame we haven't like changed market structure hasn't shifted yet. However, we can see it from the lower time frame, but I'm waiting for that confirmation on the higher time frame. So we can then expect, after breaking this low, maybe with this candlestick like this, in towards this point, maybe take out this liquidity here and then reject we reject back up into this place. Why I'm putting my entry here is because I want to like enter the best price possible, and this is going to be my last trade for the week, most likely, because I don't see any potential setup again that could happen. I mean, today is already Wednesday, so before price action happens and forms, it could be my last trade for the week, maybe or maybe not. So price comes back in here like this, and then continue lower to now break this structure, and then at this moment here I'm out, because this was where price rejected from. So I'm conscious of where price is going. So basically, you want to know where is price coming from and where is price headed. That is what will determine your risk to reward ratio. You cannot say I need a 2RR, I need a 3RR, I need a 4RR, I need a 5RR, and then you are blinded by risk to reward ratio, not understanding where price is going. So now, based on my analysis, I can ask, okay, the trade came out to be a 3.94 risk to reward ratio. Beautiful. That's a good risk to reward ratio. I can take the trade. You understand what I'm saying? So not like, oh, I want a 1:10 and then I move my TP, to the moon. It doesn't make any sense, because I know there are going to be strong rejections at this point. So I want a free fall. That's why I've been patient. So I want a free fall, and wherever price is going to stop, or where there should be a rejection, is where I want to set my TP. So set your take profit at levels that make sense, at levels that are justifiable based on your strategy, and not where okay, I'm like, let me see, if I risk $4 on this trade, I'm looking for 20 pips. So I don't even calculate the pips in which my trade gives me. I'm less concerned about that. I'm trading price action. You understand? So that is it. So now we wait for this candlestick to close. Once this candlestick close with a body below this low, flipping this place to a bearish breaker, and now these zones become strong levels of supply, like we have been marking already on the 30 minutes time frame, then I can be sure about taking my sales and then just ride it lower. So you know how I do it. Once the trade is up 1 hour, I move my stops to break even, close the other position, because I open two different positions, risk like $2 on both, close one position once it's up 2R, and then move stop loss to break even, trail it by the points of my stop loss. And if the price goes down all the way to this place, free fall, beautiful, we catch a beautiful risk to reward ratio. If it doesn't, and maybe it gets to a certain point and then wants to reverse, I'll get stopped out in profit. Either ways, it's still a profitable trade. I said this and I'll say this again. When growing a small account, you want to go as far away from drawdown as possible. You want to go as far away from drawdown as possible. Stop giving the money back to the market. The market gives you 1%, 2% of your account, and then you are crossing your fingers, not taking any amount of money, because you want to be right. You want the market to, yes, I smashed that 4RR, that 5RR. You can do that when you're already up significantly in profits on the account. Okay, now price has triggered this point even while I was recording this. You see my alert went off here. So you can do all of that. You can do all of that when maybe the account is like the account is now $220, $250. I have more breathing space to, not move my stops quickly or do some things. But at this beginning stage, I want to stack up as many profits as possible. All right. So that being said, I'll catch you guys when this trade breaks this low and close with a body. I'm believing this candlestick should be the one, and then from there we take it off, and then we can place our limit order, and it's a justifiable trade. Whatever the market does, it does. I'll catch you guys later. If you are watching to this very moment, if you are watching to this very part of the video right now, come on, you should be a subscriber. I mean, why aren't you subscribed at this moment? Why? Tell me one good reason why you are not yet subscribed, despite watching and gaining value up to this very point in the video. Smash that like button, smash that subscribe button. That is the only way you can show me appreciation. I'm not asking for your money. I do not need your money. You are not paying me for anything. So that's the most you can do for me. All right. Thank you. All right, guys. On second thought, I was about leaving my desktop when I just saw this. On second thought, are you guys seeing what I'm seeing here? let me give a quick explanation. You can see here now we have broken structure to the downward side, but the candlestick is yet to close, and it closes in 3 minutes. Okay, so looking at this, if this candlestick should close and we form a bearish breaker block, if we form a bearish breaker block here, it's safe to say that I can already enter. This is now the area of supply here. So this whole area, if this candlestick closes, this whole area becomes a strong area of supply in which I can trade off from. I mean, can trade off from this. So let's say we have this, a short position like this. Let me see what the risk to reward ratio is looking like. A short position like this, have my entry here, and then my stop loss is above this high here. This is a 1.5 risk to reward ratio. It's not that good in my own opinion. And looking at what price did previously, these areas were breaker blocks. I mean, like here, this was a breaker block. Price came back, broke, respected it, but went for the actual supply zone. So it's safe to say I can refine my entry on the 30 minutes time frame to this point like this. I can refine my entry to this sell order block here like this, and then where will be my stop loss? My stop loss is going to be above this point. So if my entry is the low of this candlestick, which is 147.443, so entry 147.443 here like this, and then my stop loss, what's the high? Like I said, this area is going to be a new supply. You could see it. So 147.695. So you have stop loss as 147.695. Beautiful. Oh, sorry, that was supposed to be my stop loss. That was supposed to be my stop loss. That's my stop level. Paste this. I have to adjust the entry back. So the entry is 147.443. 147.443. 443. Yes. Okay, nice. This candlestick didn't close with a body, so it's not yet valid. So now we have this as a 3.9 risk to reward ratio. Beautiful, beautiful. Okay, I can't place this order yet because this candlestick didn't close below. We didn't close below. We didn't take out this low yet. So looking at this, I can actually I'm making some decisions here. Okay, this is the actual stop loss, right? This is stop loss here, right? Then I need to add 50 points. I haven't added 50 points. So 253 plus 50, that's 5 pips extra. That's 303. So stops level at 303. Good. Enough breathing room for my trade to rest. So this is a 3.25 RR. I'll be more inclined to take this and this together. You know, I'll be more inclined to take this because I'll be more inclined to take this on the 30 minutes time frame than taking this on the 4-hour time frame. Why? Because if we have any candlestick that closes below this, okay, if we have any candlestick that closes below this, we are also going to definitely have a candlestick that closes, you know, making this place also flip. I mean, you can see the candlestick is not yet completed, right? It's not yet, like on the 4 hours, we still have like almost 3 hours left. But the 30 minutes time frame, if we can get a 30 minutes time candlestick that closes below this low, that already shows that this place has been flipped to the bearish side, which is also in range with the 4 hours, which means The 30 minutes is going to show first, and definitely for sure the 4 hours will still also close this place as a bearish breaker block. So that being said, once I see a closure of this place, I can decide to enter at this sell. Although uh, we have a very strong bearish breaker block here, we could experience something like this. If this candlestick closes like this, we could experience something like this and then back into the bearish breaker block, push down, might not break structure, or we see something like this, because that's going to give a change of character. We could see something like this, push down, having this bearish breaker block, and then we go back up to tap the real actual supply zone to then break structure again to the downward side. To break structure to downward side. Now, if it's some of your mentors, they'll be like, this is an A plus plus setup. Risk $20 on this trade. It's looking so clean. It's looking so good. Risk $20. Risk $50 of the account. And then you've already doubled it. Bruh, I'm risking 2% on this trade. Okay? Anything can happen in the market. It doesn't matter how clean your analysis is looking to be. Make sure you don't joke with risk management. So on this trade, I'm going to risk $4. That's it. 146.439 should be the TP. 146.439. Yep. So this is 146.439. This is a 3.31 risk to reward ratio right here. A 3.31 risk to reward ratio. You know the funniest part about this? The funniest part is I could take both. Place my order on the 30 minutes time frame. Once I see a confirmation on the 30 minutes time, now you guys are with me here because I'm trying to make some decisions. I'm making decision making. If I place the trade, now here's the thing. If I place the trade right here, on the 30 minutes time frame, and then I've already made my profits. I've already made my profits like 1 hour. So I've secured something, I've taken something off the table. Trade is now risk free, stops at break even. By then, that's when the 4 hours, probably by that time, the 4 hours is now closing to also show bearish. Since this trade is now going to be risk free, that's if it goes in my way. Since this trade is now going to be risk free, running already in profits, I could then place the limit order of this one here. I could then place the limit order of this 4 hours to then use this bearish breaker to enter and also continue lower. That way now I'm going to be risking maybe 1% of my account because I'm sizing in. So I don't want to give back more than what the market has given me on this trade and lose it all again back to this one, should in case it doesn't work out, which it should work out, but I'm just saying. So I could now size in again with 1% of my account into this. So maybe risk like $2 on this one, so that one move, two positions. If they both go well, I'm able to capitalize on this whole move, the right way. If you get what I'm saying. So let's see how this candlestick closes. If this candlestick closes on a low, I'm going to take this trade. I'll take it. I won't enter the breaker block because this breaker block is paired together with an order block, just like the way these ones were breaker blocks. So price came and actually tapped the real sell zone. So I'll just come here, take this, and then size in once the 4 hour closes again on a low with this bearish breaker block. So I have two positions running. By the time this will get tapped in, Now here's the thing, sir. If this one gets, if this by the time this one will get tapped in, my stops already on this one is break risk free. So there's no way I can lose money on this trade as long as the 30 minutes plays out well. Okay, let's do that. Let's do that. Let's do that. Let's do that. I'll catch you guys once the candlestick closes. And if I see a sign, I mean, you get the sign I'm talking about. I'm talking about this candle close on the 30 minutes time frame. Now, enough of the explanation. You guys grab what I'm trying to say. So I just wait for price to do what it wants to do. And also by 7 p.m. we are having FOMC meeting by 7 p.m. Ooh, by 7 p.m. we're having FOMC meeting. So okay, okay. So now this is about in 2 minutes time or 3 minutes time the candlestick will close. So let's look at it on the 4-hour time frame. I have this nice push, and to my surprise, this area is no longer, it's not a bearish breaker block. Okay, so that means this is off the table. This is off the table. Now let's work on this. Let's work on this that we had on the 30 minutes time frame. So this is it on the 30 minutes time frame. The breaker, this candlestick is definitely closing below. And now this is the area of, remember this trend line, this daily area of rejection we've been rejecting forward from. So now let's come down to the 1 hour. Since we have strong volume on the 4-hour now, so on the 1 hour, beautiful, beautiful. So on the 30 minutes, this is what it's looking like on the 30 minutes. I can refine it and say, okay, if I'm to enter at this point, this is like the candle close of this, but let me put it at the last buy candlestick before the fall down, so price can retrace back into continue lower. So let's say entry is going to be at 147.328. Yes, 147.328, like this. Beautiful. So this is a realistic entry for me, 147.328. This entry here, because if I put it at this point, will I get tapped in? Will I really get tapped in? But this is a strong volume candle. Let me see the candle. What's this? What's the risk to reward ratio? 2.13. Okay, and on this one here, I need to decide fast. One more minute, because this candlestick is closing right now. The high 147.696. 147.696. Let's set our stop loss first. 147.696. 368 points plus 50 points. 368 plus 50. 418. Okay, so 418 is my stops. Beautiful. Okay, so that's correct there. If I adjust my entry to the close of this breaker, is it the open of these cells here? That's 147.378. 147.3, is it 378? Let's see. That gives us a 2.5. That gives us a 2.5 risk to reward ratio. Oosh, I need to place my order right now. Price can go back in. 2.55. We could tap it. Placing my order right now, and I'll catch you guys later, because if I say this is it on the 30 minutes time frame, this is what it looks like on 30 minutes time frame for me. On the 30 minutes we could still retrace deeper. Okay, but I don't want to miss the move. Let's use the close. So that was going to be a 2.55 RR. Yeah, that's cool. That's cool. That's a good one. That's a good one. Okay. Entry at this body open here, where there is enough volume. All right. Okay, so my order has been placed. I've set my trailing stops for because I opened two positions. One is going to close at 1 hour, which is going to lock in a profit. while the other one will move for full TP but trailing on 368 points. So which means as price moves 1 hour, the SL will move to break even while the other one will have been closed, locking in, a 1% profit, while the other 1% is left to run to full TP. So it gets to 2 hour, my SL will move to 1 hour, locking in profit like that until we hit the full TP. And if we don't, I get stopped out in profit, except this trade reverses back and then stop me out, which is highly unlikely. So this is it on the 1 hour time frame. Looking at it on the 30 minutes time frame, this is what it looks like. If I say I want to enter this breaker block here, it doesn't make any sense because the risk to reward ratio will be bad. The stop loss is still going to be where the stop loss has to be. I can't say I want to squeeze in the stop loss, no. So better still, let me just enter. I could have entered at this last sell, this real order block here, but on the 1 hour time frame it's still a bit lower. So let me do that so I don't miss the trade. So now this was the point we had rejection. So I'm anticipating something like this where price comes to this point and then we have maybe some a push back up and then continue lower to take out this low as the new break of structure to the downward side, and then we could have something like this, maybe a little bump again and then break structure again and boom to the downward side completely. So this is my trade, probably my last trade for the week. I don't know. We still have Thursday and Friday though, but we see how it goes. If there is any rejection from here, maybe, but I'm not sure, except there's a market structure shift to the upward side. So this is my trade. Place the limits. Let me set my alert so I can walk away from the chart. I do not need to stay in front of the chart all day. So which alerts are all this? Let me delete these ones. So I stay in front of the I set my alerts, walk away. When price gets to my area of interest, I'll see how. It's not even an area of interest. Once price triggers my limit order, because I have a limit order pending now, so once price triggers that, uh I'll be in the trade, but also I'll be aware that I'm now in a position. You feel me? You feel what I'm saying? 3378 as my entry. Yep. So that's the entry. Once price get there, I'll get notified, and from there I can set an alert for the full TP here. Okay, that's it for now. The outcome of the trade will determine, will it be profitable, will it be a loss. The trade is by the book, A plus setup by the book, but still I'm still risking 2% on this trade. Oh, sorry, 0.01 lot size came out to be a $2.5. It wasn't $2, so which means I'm risking $5 on this trade, which is still fair enough. $5 on this trade. So if this trade goes against me, I'm losing $5. If it's profitable, we'll see how it goes. Good morning. This is 8 a.m. in the morning, and this is what this position is looking like right now. This is what this position is looking like. It's not looking good, and I'm not in prayer mode, like, oh please, I hope this thing comes down, or this thing. I took the trade by the book, but you can see on the 30 minutes time frame we had this push up, and now we formed a bullish order block. I mean, how? After tapping into this zone and price is going back up, despite the strong downward momentum, price seems to be going back up. Let me adjust my risk to reward ratio. So I'm currently in a drawdown in this trade. Let's adjust it like this until the end of Thursday. This is what I don't like. I don't like when I enter a trade, and because I like to enter the market where there is volume, where there is momentum in the market. So me entering and then price just decide to, let's go to the 1 hour time frame, and then price just decides to do what it wants. Is you know. So we had these lows being created, break of structure, everything clean, everything clean. And you can see here, let me zoom in. When price returned back to my entry, we had this strong respect candle. This is a beautiful respect candle here, meaning that this zone was valid. Okay, we had this strong respect candle, and now we just started consolidating slowly to the upward side, but with wicks. We're having a lot of wicks, and then boom, we have this candlestick now with big volume, and price is coming now, uh, more than halfway through into my drawdown. If I was on the lower time frame, I would have gotten knocked out already in this trade since. That's why I avoid lower time frames. I evolved over time. Okay, I used to trade the 15 minutes before, but now I trade 30 minutes. In fact, I trade the 4 hour time frames, 4 hour or 1 hour time frames. I just use those 30 minutes, 15 minutes for entry in most cases. So now the question is, what's my plan? Okay, I still believe this zone is strong enough to push price. Okay, I just have to exercise patience. I still believe that this zone is strong enough. I mean, 1, 2, 3 bearish breaker block, bearish order block, bearish order block on the 1 hour time frame. Come on, come on. I still believe price. This zone is strong enough to push price. But hey, welcome to trading where you can do everything right and still lose money. Welcome to trading where you can do everything right and still lose money. So let's look at the higher time frame to get a clearer picture. So now in the higher time frame, we had this huge rejection candle closed as a doji, followed up by a strong downward push. The next candlestick was also a strong downward push. Boom. And then a little bit upward. Now a doji. After this doji here, this doji usually is a sign of they say it's neutral, but most of the time after a doji comes a reversal. So after this doji, this next candlestick is supposed to be like go down, based on patterns I've seen. Now I'm trying to look at things from pattern wise, not I already have my technical analysis. Now I'm just trying to read candlesticks. I'm trying to read candlesticks here. So I don't know why we're having a strong bullish candlestick inside here. I just don't know why. Okay, my stop loss is perfectly placed at the right, the good place. It's even above this doji here. So will we reject to the downward side eventually? So now this area is now looking like an area of liquidity. We have liquidity resting on these lows here. You can hear from my voice, I'm very calm in this trade. I'm calm. Okay, I'm calm in this trade because I did all the thinking. I did all the thinking and all the calculations was done before I entered this trade. So now is not the time for me to start doubting myself, and except I see something that is, you know, not that makes me realize, okay, my whole sentiment is wrong, and then I can start looking forward to maybe breaking even on this trade or something. But until then, nah, I'm still holding. I'm still holding the trade. So this is looking like a area of liquidity price wants to take out. That is price is supposed to take. I mean, come on, look at the fall. Look at the fall. Look at the fall. Now let's go to the daily time frame, because whenever you are confused, you want to look at the higher time frames for clarity. So yes, as you can see on the daily time frame here, we had this push up, then the next candlestick sell. This was the low of the candlestick stand, and this was the high. If you are using the previous daily high and previous daily lows, okay, so this was the high and this was the low of this candlestick. The next candlestick, this is the high, okay, and this is the low here. This is the low. So if you are to look at candle signs, this candlestick here closed below this candlestick, indicating that we are in a downward trend. So now this daily candlestick here is supposed to go to at least this place. This today's candlestick is supposed to go to at least this place. All right, that's where this daily candlestick is supposed to go, because you can see that when we had this lower candlestick, the next one closed below, which means the trend is still bearish. It didn't go, and take out this high. So this one might move, to some certain level, but I'm still believing that it should wick down and then go at least to this candle low. It has no business going to this place, because if it goes to this place and then breaks above this place, then it's a disrespect. It's now disrespecting, which means price is going higher and not lower anymore. But nevertheless, there's nothing I can do than to just sit on the trade. I mean, I'm in. I just have to sit on the trade. Whatever happens. You do your analysis, you do everything, and then you allow price to do what price wants to do. That's why risk management is very, very important. I tell you that. If you are risking too much of your account on a particular trade, in cases like this, this is where you start to panic. So let's look at the weekly time frame. On the weekly time frame, let me make it like this. All right, good. So on the weekly time frame, we can see a very huge rejection. This was a very, very huge rejection on the weekly time frame. This was a very huge rejection. So now let's zoom in. Good. So now we have this high here that was formed as the area of supply. I have it there. And then we have this low. If we look at this also with candle signs, because now I'm trying to read patterns, I'm not here to analyze why I entered the trade. I already know why I entered the trade. I'm just trying to look at the candlesticks that are forming, okay, to be able to interpret price in a way. So if we look at it from here, okay, this weekly candlestick, the last one, closed, it closed below the low of this. It closed below the low of this, but not with a body. Okay, not with a body, but still it was bearish. So now, as long as this candlestick is yet to complete, I'm still expecting it to go and take out this low around somewhere here. I'm expecting price to come to around somewhere here, but that's just my own analysis, and that's just basically what I can read. Now look at the monthly time frame on UJ. We are bearish. We are bearish on the monthly time frame, because whenever you are confused about price action, just go to the higher time frame. Go to the higher time frame for clarity to understand what's going on. So you can see on the monthly time frame here, we had this up, then down, then up, then down. So we are coming lower and lower. This is a huge strong volume to the downward side, although this candlestick is yet to close. But safe to say that price is coming to this area of demand here, this area of demand here to excuse me, to fill in some buy orders to then continue higher. But at the same time, this doji candlestick and this strong impulsive candlestick is oof. It might turn out to be something like this. It might turn out to be something like this. The way we had this impulsive and then we had this sell, 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 sell. So you could have this impulsive, then sell, 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 sell. Impulsive, sell, sell, sell. Until you tap this buy order block to then continue higher from there. The same way this, I think this is a weekly area of demand or daily area of demand if I go back in time. So that is it on this trade so far. There's nothing I can do about it than to just hold. If you hit me out, it's part of the game. That's trading for you. But so far, I'm still confident in my setup. Maybe fundamentally, I think we have news coming today. We have news coming back today. Sorry, coming out today. Um, Let me check Forex Factory. I think by 1:30 is unemployment claims. FOMC came out yesterday. It was bullish. Uh, yeah, by 1:30 today we have news. So maybe if I survive the trade until then and then that comes out to be a red for USD JPY, price could come down back. So this is you guys watching me through the emotions of my trade. I took my trade. It didn't turn out the way I wanted it to be. I don't like staying in drawdown for long like this. Okay, but it is what it is. Welcome to the reality of trading. So I'm not just taking trades and saying, oh guys, I saw this pattern, that's why I entered. I saw this and that's why I entered after I've taken the trade. No, I'm walking you guys through what I spotted, how I marked POIs, how price came there, what I did days and days and days and days afterwards, taking the trade, managing the trade, going through the emotions of the trade, coming out profitable or in a loss or in break even. Okay, so if there's anybody that wants to drag me in the future, if it was a fake or is a real, I hope you watch this. I hope you watch up to this part. All right, this part where you see me going through the emotions. This is not replay or anything. I'm going through the emotions of trading, going through the emotions of an ongoing position where there is real money on the line, real risk. All right. Enough with the yapping. Let's see how it goes. I'll catch you guys afterwards. Either I hit stop loss or I hit this one area or whatever it is. Thank you. Alright guys, this trade finally hit my stop loss, and that is what happens in the markets. Welcome guys. You could do everything right, all by the book, all through your urge, and you still don't get paid. So what's the next thing? You move on quickly. So you move on. That will be in the next episode. I don't want to explain what I'm looking forward to in the market in this, but this is it. You can see it on the 1 hour time frame here, and that's it. So we are having a change of character to the upward side now on the 1 hour time frame. So it is what it is. Welcome to trading, and that is it. A loss for the trade, despite all my efforts, despite all my days of coming to the chart and trying to mark out zones and everything, still didn't pay off. That's trading, bro.